Hi, everyone, and welcome to this edition of the Buddy Study Group for Worksite Solutions. I will be presenting today on the standards long-term care products. And just for a little context, I think we started talking to the standard probably about 3 or 4 years ago. Back then, they were called Allstate Benefits. So if you hear the standard, it's the same company as Allstate Benefits, American Heritage Life. I think they've been building these products since before Washington State did their payroll tax. So they've been working on these products for quite a while. We came into contact with them because of the Washington payroll tax. They were one of the few carriers during that flurry at the end when they had to meet that November 2021 deadline that was still in the market. And they were able to do a lot of enrollments for small groups and a lot of flexibility. And I think it just showed like their colors that they were really in it to help clients and to win that business, whereas other carriers were exiting. They really jumped in there. So one of the reasons why we got more involved in the last couple of years is that they added true LTC riders to their products. So originally it was chronic care riders, which of course are valuable, but obviously there's a lot more benefits in some cases to having a true 7702B LTC rider on the policy. So when they started to add those riders, we got a lot more involved with them. And just in the last, I would say, year or so, we've seen all these products coming to market. So I'm going to show you kind of what we've learned, but I know many of you in this room have also done a lot with Allstate / the standard. Steve, I know you used to be actually a wholesaler for them. So definitely unmute and raise your hand and add your comments so we can all share what we're learning there. So let me start off by doing a quick screen share. I like to start off with the Buddy System portal, where you can see, our product recommendation engine, and you can kind of see where the products are. So what you'll notice is if you choose just the generic view, a lot of times just the default carrier we land on is the standard with their term to 100 policy. And the reason why I think this has been very competitive in the marketplace is that their term product tends to be less expensive than most of the other solutions in the marketplace. One of the reasons is it's term to 100, whereas if you do the Chubb or the Trustmark Life Plus Care, those are term to 121. So a little bit more expensive, but a little bit longer duration benefits and guarantees. So trade-offs, but again, if you want the lowest cost solution, we're finding that the standard, because it's term to 100, is winning a lot of those cases. Another thing that we like about the standards products is that when we look at these case highlights, true LTC rider on that product, 7702B, it's got extension of benefits. So when you buy this policy, you get double that duration for the long-term care. So if you elect 75,000 of life insurance, you get 150,000 for long-term care. So that makes it more long-term care first. Life insurance providing the stability and the guarantees, but it's more secondary to the long-term care. And we like that this restoration of the death benefit rider also gives you back 100% of the death benefit. Some of the other carriers, you get a third or a half of the death benefit back, but with the standard, you get the long-term care and you get the full life insurance on top of that. So if you elect 75,000, you get triple that amount of total insurance coverage, 150,000 plus 75,000. So all of those factors put together really kind of tell a very compelling story from a value perspective. And as you know, the way we look at that is how much premiums do you put into the plan? How much benefits can you get out of the plan? And we look at leverage. So this has 9.4 times leverage for a sample, 45-year-old employee. That's an easy way to explain it to clients why this is so valuable versus, other insurance solutions. Even like individual solutions, these might have higher leverage than you would get from a fully underwritten individual policy. So the standard has a second product for long-term care as well. And we like the product, but I would say the term product is starting to become more popular just because of that low cost term perception. If you click on this version, you'll see that this is Group LTCI on the whole life product. So you'll find that this product has more guarantees. So this is the one that will go out to age 121, guaranteed premiums, guaranteed benefits, guaranteed cash value. Also that same story, right? You see how the long-term care benefits are identical, to the term product. So you're still getting that value, but it's a little bit higher price. So again, you're going to get a little bit less leverage because you're paying a little bit more for that whole life based product than for the term life based product. Now, there's one exception, and this is a really important one. Normally in California, we have the older generation products, I'll say, right? It takes a little bit longer to get those approved in our state where I am here. And with the standard, they actually have a version of their whole life product, which actually is more compelling than anything else we see in the marketplace. And I'm going to go into our quick quote to show you why that is. So we have the ability for you to quote these different products without having to go to the carrier and get an RFP. And you'll see that the second one on the list here says WL, whole life, 6% acceleration for long-term care, and 5% inflation for California and Utah only. Okay, so when we add this, you'll see obviously it's a higher cost policy, but look at the LTC benefit growth, right? It's going up 5% compounded. So if you're a 45-year-old employee today, but you're planning for, care in the future, let's say you need care at age 70, those benefits are going to increase and be a lot more than what they start off with. Just to kind of pull this down and choose age 80 to show you what that looks like, you're getting even more leverage into the future. So even though you're paying these premiums longer, that 5% compounding is growing your benefits so that you're still getting more value as time goes on. And this 5% rider is very inexpensive. So one of the things that you can do with this is instead of buying the full face amount, so let's say you were choosing 100,000 a face amount, you'd have quite a robust group type of policy, right? Quite a lot of benefits here. But if you want to save on cost, you can reduce the face amount, still have pretty good LTC, but have a lower price point. And that's really kind of the secret sauce here, is that let's say we were to compare this to a term policy, and I'll do this kind of with our comparison tool here. So you can select, and I'll do the same face amount on the right-hand side for the term policy. Let's do that term life we were looking at earlier. You'll notice that the term life is less than half the cost of the whole life with the 5% compound inflation, right? But look at how much higher the benefits are. If we actually reduce the benefits with our focus on long-term care, we can make this a lower price product with the same LTC as the term life. So it's all about how you design the plan, right? Because all the client cares about, what benefits am I getting out of the plan, right? They're not thinking about, oh, I'm electing the same death benefit. It doesn't matter necessarily the death benefit. What matters is this right-hand side of the chart. So the reason I'm showing this to you is it may sound to the client like, why am I buying whole life when I want term life? But it all has to do with the fact of what do you get for the long-term care that really matters.
Mark,
Yeah.
Chris wanted to know about what about this spouse option in California and Utah?
Yeah, great question. The good thing about both the whole life and the term life is that the rules are the same for the standard pretty much regardless of which product you choose. You can include spouses. The standard lets you have guaranteed issue for spouses. They'll have a little bit lower limits. So for employees, you might get 75,000 guaranteed issue for a small group, 150,000 guaranteed issue for a large group. Spouses will probably be about 25,000 for a small group, and maybe upwards to 50 or 75,000 for a large group for spouses. So you do have spousal coverage. It starts off lower, but even if you were able to get like 50,000 for a spouse, because of that compounding, you can get quite a large plan, even for a spouse getting coverage here too. And the other great thing about the standard that we like and why it applies to so many of our groups is they're much more small group friendly. So they do large groups, they do, associations and PEOs and non-employer groups, but they'll also give us proposals for employers down to 3 employees. So you can get, guaranteed issue for small business owners and for their clients. So you have a lot of access to this product across the board, where other carriers may not give us offers for, groups under 100.
So this that was a question that came through the chat. What is the minimum number of lives for guaranteed issue in California? And
Yep.
do spouses count towards meeting those minimums?
That is a great question. Generally speaking, they're going to want at least 6 applications. And you can do down to 3 employees if you bundle an accident policy with the long-term care. So if you do like 2 policies for each of the 3 employees, you hit their 6 application minimum. But if you were to do just long-term care, you would need 6 employees, right? Because then you can do 1 application for each of them. And generally, you're going to want to do employer funding. Now, for spousal coverage, when you add it to that, I would have told you about a month ago that no, you can't include spouses, but we did get a case where they included a spouse and towards our minimum. So they may be getting more flexible in allowing that, but I wouldn't count on that. You can't do that when you get a proposal up front. You can't say, I'm going to include these spouses to make the participation. They have to be employees. When they look back at it after the enrollment, they may give you some credit for that, though. I hope that non-answer was a good enough answer.
Yes, I think so.
Okay. As usual, the carriers have rules, but they always make exceptions. So you want to make sure that you ask your wholesaler and you talk about that group specific situation with them. I can't see the chat, so yeah, feel free to keep reading questions, but I'll continue. Oh, go ahead.
Another question coming in. From Joe. California is a big market for him. Please send agent guides in. Oh, he has a 13,000 member national association he wants to discuss.
Okay.
So that's fantastic, Joe Graves.
Yeah, a lot of opportunities out there, Joe. And I think I know which one you're talking about because I think we spoke about it a few years ago. But yeah, I think that can be a great opportunity. I will say this about non-employer groups. Each carrier, again, looks at those case by case. They sometimes have to file them with the states. And therefore, certain products can work for associations. In California, it may be a little bit more limited on the ability to do that with the standard right now because they don't have an association approval for their whole life, which is what the one we're talking about, the 5%. But they do have the association approval on their term life. So again, a lot of little nuances there, but just let us know where the opportunity is and we'll kind of help direct you to which carriers will fit that particular situation. So, we talked about at a high level about the standard with products. And again, these are the tools to use to figure out, kind of how to shop the market, how to understand the value. One thing that I would mention, and thanks to Gretchen and the marketing team, in the marketing section of the portal, we have a number of resources. We have these kind of one-pagers that you can edit in Canva. So if you want to change the numbers or the language or bullet points, you can change the branding. You can take out the buddy branding and put it in your company branding. Whatever you want to do, you can actually download them here. But scrolling down further, we have a demo page for each of these. So almost always with presentations, let's take Joe's 13,000 association as an example. When we're coming to them with the concept, we'll usually bring a one-page product summary and we'll kind of pick which product we think is the best fit. So let's say it's the standard term to 100 with the 5% inflation. You can click on this link and it's going to pull up kind of this sample landing page. I would include this to the client to help them understand what this enrollment experience looks like, what's special about the plan. And more importantly, we have a version of this calculator that just has that one product in it. So they can kind of play around with it. And what I would recommend doing is on the first call, get onto like a screen share, like a Zoom like this, and show them and explain to them how the plan works. But you do have to walk them through it. I know many of you in this group are experts on these products. But what I usually do is start off at point today. If you need care today, explain that if you elect 100,000, this is how the long-term care is paid out, 6%, 6,000 a month. But do go through those explanation steps with them because just like I'm doing, and you're seeing that experience firsthand, there's a lot of moving parts to this, right? And if you go very quickly like I'm doing, they may get lost with it. So show them the 100,000, how it turns into 300,000, and then show them the future benefits with the tool here so that you can see what those future benefits look like. And you'll be surprised. They catch on very quickly to it, and you lose those objections about why is this long-term care, right? People are confused because we're doing a hybrid, right? This is a life insurance policy, but we're focused on the long-term care benefits, and this helps them understand why. You can also use this tool to compare it to other products in the marketplace. So if you want to show them what an individual fully underwritten plan looks like, it does that comparison for them. So they'll ask you, is there a group discount? And you can say, like, this is what the price would look like for a similar policy on the individual market. And you can kind of see what that discount, effect would look like. You can see what this looks like on the right-hand side, for a male and for a female. And of course, females pay more oftentimes on the individual side for the long-term care. This being unisex priced, that helps them really understand those discounts better. So this is one of those tools that we have in that buddy system for you to use for these pre-sale cases and help you move forward with the client. All right, I'm going to jump back. And like I said, just feel free to interrupt me because I'm just going off the top of my head with different topics that I think might be of interest. So we talked a little bit about, the high level picture of the plans. One thing that I'll share with you is if you go specifically into a state, it's going to update this list. So let's say that we're going to choose California as the example. You'll see at the bottom here, do you see all of these icons updated? It's because we have an algorithm that actually will tell you which products are available in which state with which types of features. Okay, so there's quite a lot of intelligence built into this. And you'll notice that even the one page, you notice it kind of changes. So it shows you that inflation growth on the California 5% plan. This is what I would use when you're initially running into an opportunity. What is that situs state most likely to be? Use this to help you determine which products are available in that situation. So California does not have the term product from the standard yet, but just to give you some intel, we expect that to be available starting early next year. They've already filed that, and I believe they're getting close to approval. But as we know, it takes a long time to roll out, a new product in a new state. So that's when it will come to market. If you pick another state, let's just pick Arizona as an example. Again, term is available there. The one thing that I would do is to download this PDF. You save it to your computer. Again, you can also email this to clients. Like you saw in the marketing section, you can edit a lot of these templates as well if you want to change in the details. But the nice thing about this is below that, value proposition pie chart, you can see details about the plan, permanent coverage, guaranteed issue with no medical underwriting, guaranteed level premiums for life. So the way that this product works is it's a term product, but because it's term to 100, the rate you pay today is the same rate you pay forever. They can never increase your premium, including when you port the policy, fully portable to the individual policy at that level rate, that issue age rate. That's really important because most benefits don't lock in that premium when you leave the group. And these policies all do, including the standards policies do that. So really important because that's kind of like, what's the catch, right? What's the gotcha? You do not suffer just because you're buying a group policy. It operates like an individual policy. Now this says death benefit projected to remain level, and we're really careful about our language here. So the way that this works, and this is very nuanced, is the term to 100, the benefits end at age 100. So one gap that you have in this policy is client may need coverage above age 100. You do want to supplement this with an individual policy. But the other thing about this is the death benefit is only guaranteed for the first 5 years. The LTC benefit, though, cannot change, cannot be reduced. Now, the death benefit, again, this is based on the actuaries of the standard. What they've told us is designed to be very conservative, meaning that it would take a mortality event like worse than COVID-19 for them to change the death benefit and reduce it. They've never reduced it before. Again, that's makes you a little bit nervous, right? Because it's not a full guarantee, but the fact that the long-term care cannot be reduced, and that's guaranteed, and that's the primary reason we're offering this, that's makes us comfortable enough offering it. But if that's a big sticking point, that's where you may want to go with the whole life instead. Because the standard's whole life, guaranteed to age 121, guaranteed premiums and guaranteed benefits, they can never change. So this is where you might have some nuances about which might be a better fit for the group. It's not all about price. Some of the groups are going to say, I want to make sure this is rock solid and can never change, and I don't care what the insurance company says. That's where your signal to go to that whole life product.
Mark,
Mhm.
what
Yeah.
does Jason Dutra call term to 100?
What does he call? Oh, permanent term?
No, terminant.
Oh, terminate. That's right. He came up with it yesterday. I forgot.
I put that in the chat if anyone wants to remember it.
Yeah, we're coming up with our own like little a language now. Terminate insurance. Um, so yeah, there's a lot of, little details here, that you want to kind of get familiar with, but don't let this hang you up, right? These are the things that you will learn as time goes on, as you get those questions. But in general, they're going to be very similar payouts, types of features as you would see from an individual policy. On the right-hand side with product features, you'll see the same thing. It kind of explains how the acceleration, the extension work, how much that acceleration is for long-term care. It also has waiver of premium. So the nice thing about these policies is if you go on claim, you don't have to pay the premium. When you get off of claim, though, you have to resume the premiums, just like, an individual policy waiver of premium. 90-day elimination period, again, similar to individual policies. Indemnity LTC payout, really important, right? If you need help with your 2 out of 6 activities of daily living or severe cognitive impairment, and you're getting services from a licensed provider, so at least 2 hours of home care, you get the full monthly amount as like a cash benefit. They're not going to ask you for receipts. You're just going to get the $4,500 a month in this case. Or if you have that inflation rider and it's like $20,000 a month, they're going to pay you $20,000 a month without receipts. So really valuable, especially with that inflation, having that indemnity style payout. Plus, there's a lot of convenience. As we know with reimbursement policies, it can be a little bit aggravating, right? To have to do that administration or have the provider send those bills in to get paid for. The standards products and all of the group products really on the hybrid side have indemnity style payouts, which is really nice for the client. And you'll see, I know there were questions about, voluntary buy-ups and spouses. We have that information here as well. Now, these LTCI benefits that are listed below are going to be based on the group. So a lot of them depend on group size. So when we downloaded this, I chose kind of any group and generically, but in the Buddy tool, you can choose different group sizes, and it's going to update the limits for you. So if you choose, generically, we're going to show kind of a conservative limit. But if you have a larger group, let's say 100 plus, it's going to show you a higher benefit. Let's do the standards one, 9,000 a month. So for groups that are larger, usually it's just 250 plus, you can get a higher guaranteed issue limit based on the group size. And this will update and kind of guide you to those group size differences. So whichever one you download is going to reflect the group size that you chose in the product buddy. So this is the small group, kind of by default. Now it says 150,000 of LTC because again, we want to show that total LTC benefit amount like you see up here. But in parentheses, it says 75,000 of death benefit, just to remind you that you're electing 75,000 a face amount to get 150,000 of long-term care. Simplified issue is also available with the standard, so that's another way to stack coverage and to buy up more coverage. And for employees, we can get 500,000 of LTC in total, with the extra amount being simplified underwriting. Again, these are going to vary based on group size as well. So when you're quoting this with the carrier, make sure you ask, hey, I would like simplified issue. And if you're doing employer funded cases, we see those often getting approved with simplified underwriting. Sometimes if the group is too small, they'll just give you guaranteed issue only. Not a bad thing because the guaranteed issue is the main event here. But if you do really want simplified issue for a group, make sure that you ask specifically for it because it does require the underwriter to approve it. And down here, you'll see spouse GI, like I said, 25,000 is guaranteed issue typically. But if you get simplified issue approved, you can get a much higher amount extra with the simplified underwriting. A few other kind of really nice to have things is the standard has a pretty broad age range, 18 to 70. Although I caution you that the rates do get a lot more expensive as you get into your, early, mid, late 60s. So the value proposition does change. Now, again, because it's guaranteed issue and because people are close to retirement, in general, they're very happy to have access to these policies because at age 65 on the individual market, about 50% of people get declined based on their health, based on pre-existing health conditions. The fact that you don't have to worry about that if they're actively at work at least 20 hours a week, that's a big game changer there. So pricing isn't really the whole story with that age range, 60 to 70. It is a lot about convenience. It's a lot about guaranteed issue, not having to worry about providing all your medical records. That is what is winning a lot of those cases. And we do see a lot of enrollment at those ages. Okay. Well, I don't want to overwhelm Gretchen. Let me pause for a second. Anything that you're seeing topic wise that
Uh,
we should address?
no, no new questions.
Okay.
Yeah, I think you can just keep moving along.
Keep moving along. Okay. All right. I'll go a little bit deeper into process. We always get questions about what does the enrollment process look like? The nice thing about Standard is they've been really good to work with their operations team. And by that, I mean this. We can do group sizes, down to 3 employees, like we talked about. We can do simplified issue buy-ups, which not every carrier, offers. So the ability to stack coverage and buy 2 policies is really helpful. We can do employer funding with voluntary buy-ups. So we have flexibility to enroll pretty much any combination of those things and make it fit that group without having it be too difficult to do. And the Standard is one of the few carriers that does all of those things, that really allows you to do all of those things. So I would say that's really where they're going to be a winner for you, is if you have a case, it just doesn't fit the box, large group type of checkbox. That's where I think they're a good fit. We talked about associations. A lot of those, you're not going to have a payroll deduction. And the Standard is very open to allowing you to direct bill ACH with those groups. Again, you have to kind of make sure that when you do the RFP, you ask for it. You say, hey, we're going to want to do an ACH enrollment. We want guaranteed issue and simplified issue. And that way, when they approve the proposal, they have that approved by underwriting. But once it's approved, we have multiple different enrollment platforms to help you depending on what the type of group situation is. And we can integrate the LTC enrollment with the client's benefits or with the other broker you're working with their benefit administrative system. So you don't have to go into the weeds and memorize all this. When you sell that case, Buddy's going to be helping you figure out what's the most efficient way to enroll this. That's our job. That's what we are really expert at. And the Standard has been a good partner to work with to make sure that every enrollment we do, we have the right solution for them, and we're not having to fit them into the carrier's, cookie cutter box that doesn't fit.
And the other cool thing about ACH,
Mm-hmm.
as far as group, is that it just reduces the friction around portability too.
It's a great point. Yeah. Yeah. There's kind of like 2 points of friction for the employees at enrollment. And we want to make sure that ACH is like an e-commerce experience. So there's no hiccups. It's automated. If the client doesn't have their checking account number handy, the system automatically reminds them, to fill that out, and we don't have to chase them down. And then at point of separation, like Gretchen said, when you port the policy, if it's already set up for ACH, there's less friction because the billing part of that process is already completed. You just have to fill out, a portability form, and you're good to go. But because of that, we see a lot less lapse, a lot less drop off with ACH enrollments than with payroll deduction enrollments. You can do either one, but the ACH we oftentimes prefer. And HR oftentimes prefers it because they have bad billing experiences with the carriers. And if you do ACH, it's direct bill to the employee. The HR doesn't have to worry about the billing at all. And there's a lot of peace of mind. And again, our job is to make HR's job easy, right? So that is a really key part of this process. Just in terms of other things to know about the Standard overall, is they have been merging with the Standard on the so Allstate Benefits, right, which was acquired by the Standard, is merging with the Standard's legacy worksite division. Okay, so there's like two teams that have been brought together. They're taking all of the Allstate products and they're using them across the board. So their voluntary products are going to be the ones that are going to be the survivor in terms of what the company's going to use moving forward. But the nice thing about it is that they've begun to give us access to the Standard's long-term disability products as well. And one of the perks of that is they've started a promotion. They said, if you buy the Standard's long-term care products, you get a discount off of the group long-term disability with the Standard by bundling their disability solution. And you can add that to other discounts that they already have. So if you do the GSI IDI product from the Standard, the individual kind of multi-life product, and you have a discount on that, you can keep that discount and add the additional discount for the group LTD. So we're starting to see new opportunities even in expanding the products you're offering because, you know, bringing on board these clients, they want to incentivize them to add their other products. They're creating some interesting programs for it. So it's brand new, but good to know about if you do any disability or if you work with brokers that do disability, say, hey, if you do the long-term care, I can get you a discount on your core product, on your group, you know, disability product. So again, we like what we're seeing there in terms of just creating more reasons to work with them and more incentives to do the long-term care program.
Mark, we have another question about going back to employer funding. Can there be 100% employer funding, or does there need to be some employee portion of it too? And if so, what is the split?
Great question. It's very flexible. I love in this market where the answer is almost always yes, you can do that. So we've done cases that are only employer funded. We've done cases that are all voluntary, but most of our cases we do both. So what you described is our most common scenario. We do a base plan for everybody, and we do voluntary buy-ups for the employees, the spouses, and we do education during that enrollment as well. So the answer is you can do it whichever way is best for the client.
All right, we got a couple more questions that came in.
Okay.
Minimum number of lives for group LTD in California. How many hours are required for LTD?
Yeah, so the long-term disability, it's newer to us. We're actually going to have the Standards wholesaler on the study group in a couple of weeks. Then they're going to go through the disability product in more detail. So they'll do a much better job than I will because I'm still newer to it. But I did ask that question. And the answer is they can do small groups with that product as well, down to like 2 or 3 lives. Okay, but you're going to want employer funding, right? You're going to want the same criteria that you do for the long-term care. You don't want to do all voluntary. So it's really contingent on employer funding there.
Okay. And then Gail wants to know, what about tailoring to the specific industry of the group or association for the DI package?
I haven't run into any limitations there, Gail, on the long-term care or the long-term disability. But that's not to say they don't have some industries. There are some more challenging industries, like we work with dental offices, dentists, and we found sometimes that carriers are uncomfortable about disability because they have higher claims experience with dentists. The Standard has actually given us offers for dentists where carriers like Guardian and others have not given offers. So right now it's been pretty positive, their flexibility in offering to those groups. But they're going to want to look at claims experience sometimes and get some more detail if they're worried about the risk.
That's the last question for now.
All right. All right, let me think about next topic, which I'm thinking of going into a little bit more of that employer funding process, Gretchen, which,
okay,
again, one of the reasons why we built these tools is to make sure that if you have a census, that you can more quickly and easily get a quote. So let me show you real quick how to run an employer funded quote. And this is a template that we're uploading to the marketing section of the Buddy system. So this is kind of how we would look at it, is we have all the employees listed here. We have their dates of birth. Usually we'll calculate the ages as of a particular effective date. So just pick a date into the future, a few months into the future. You don't have to be too specific. It's not going to make that big of a difference. So I chose 6/1/2026. And then I chose two plan levels. So I chose like a minimum base plan level, 10,000 of life insurance, 20,000 of long-term care. But this is the plan that has 6% acceleration with the 5% inflation. So it's going to provide a higher monthly amount that's going to grow and still be meaningful enough to want to keep that coverage. And then I showed another base plan level, 25,000. So at a higher base plan level. The way that I ran these rates is I copied over the dates of birth from the census. And that's really all you need to run a quote. And there's a census quote tool in the buddy system. You choose the effective date here. So I'm going to go to June 1st, hit escape, and then copy and paste this in here. So you will actually have all of the ages calculated for you in the software here. Again, you've looked at Product Buddy and the quick quote already, so you have an idea of what you're going to quote. And I chose that term life with the 5% inflation of the monthly benefit, 10,000 level, and it calculates all the rates for all the employees for you. And you can do that same thing and choose the 25,000 level. So right here, you can see the total monthly premium for that group right at the top. But what I like to do is I like to just come here, and I use my keyboard to do this, but I copy and paste the numbers from the tool right back into the spreadsheet. And you'll see when I do that, I just literally pasted that in. That's how I got from the census quote to a client-facing summary that you can send to them with those totals at the top. The other nice thing about this template is you can do carve-outs. You can say, hey, I want to pay for a certain number of people. You can insert, this is just an Excel file, so you can do what you want here. And let's say we want to include the first 5 people. We'll call them the executives that we're going to fund. You can filter on those executives, and this is going to update with the total cost. You can see like how inexpensive it is, right, to pay for all of these employees' coverage. It really is a no-brainer for the employers to pay some level of employer funding on these plans. And really, the key to that is it hits that minimum participation, so that the carrier is not going to, worry, and HR doesn't have to worry about hitting that minimum participation. So really important that you use this tool to get some funding, because it really is easy to do that. It's not high cost, but it's going to make your program successful. So I can't stress it enough. Doing all voluntary versus doing just these 5 people funded at the minimum level makes a huge difference. So this software, this tool will be useful for you. And again, you can quote different products. So if you want to look at the standards term life and their whole life as an example, you can go back here and you can add in the whole life products. I'm going to do the one without the inflation. I'm just going to assume that this is, not in California. And you can see what that pricing would look like. So this is the 10,000 for the whole life. This is the 10,000 for the term life. So you can, again, do comparisons on your actual group and your actual census. If you get used to this, you get comfortable with this, you can come in here and you can on the fly get quick answers for your clients without having to go back and forth with carriers. You can find out if there's opportunities out there.
Mark, Gail asked, you did touch on this a little bit, but Gail asked, what about buy-ups from a base plan offered by the employer?
The answer is yes. Good news, always yes. You can do buy-ups. Now, sometimes they'll give you 75,000 a guaranteed issue, and you're paying for 25,000 for the base plan. So the employee can buy up another 50,000 with guaranteed issue on their buy-up. If you want to do more than that, you have to get the simplified issue, and then you would actually buy up to the simplified issue level above 75,000. But it's just the incremental extra amount that you get above that base plan that you can buy up to. You have to type it in, Gail, because I can't hear you. You're on mute.
No, that's it. That's good.
Okay.
You answered it.
Right. Well, I think Gail has a follow-up, but if you do have it, feel free to type it in.
I don't see a follow-up.
Okay.
Might be going just to you.
It could be. I can't see my chat, Gail. Sorry. I can multitask, but not that well. All right. So, just in summary, just to kind of take a step back, we talked about, the standards products. They have two really great products. Um, the whole life is available in all states except for New York, I believe. Maybe like one or two other smaller states. I'm not remembering. And the term life is available in at least 40 states now. It's their newer product, but because of the pricing, it is becoming very, very popular for us. Just because the value proposition and the affordability. So I would say they're definitely one of those top carriers that are in our lineup. Um, the only other carrier I would say in that small group market that really competes with them is Transamerica, which has the universal life product. And Trustmark has started to allow us to do smaller groups on employer funding down to 25. They used to be 100 minimum, and they've since reduced that down to 25. So we are seeing a little bit more flexibility from some of the competition there. But all in all, you have some great options here. And I would say we're really thankful, grateful for the partnership, and grateful to have these carriers coming into this market with really innovative solutions and being long-term care forward. I'll leave you with this because I know we're kind of getting to the top of our 45 minutes at least. Is when we first started talking to them on their newer products, one thing they told us is they had a few priorities at Allstate at the time. One of
Hmm.
them was long-term care was like their tier one priority. They wanted to be known as the long-term care carrier, and therefore they were getting a lot of latitude internally to do these offers that we haven't seen for many years. So that again is really exciting to hear. And I haven't heard any changes since they've been merged with the standard. In fact, even more so, we're being encouraged that the standard really likes to be in the long-term care business. So again, I think there's going to be a lot more here to come. A new innovation, new products, more flexibility. But we'll keep you apprised on the study groups as those things change.
Mark, do we have a carrier grid that shares the minimum number each will issue?
Let me go to our sales guide. So the group sales guide, you'll see it has the carriers at the top that you can kind of tab through. And this is where you can get more of that detailed information, Gretchen. So great question there. And you'll see small group friendly, has the ability to issue down to 3 lives. And each carrier has this grid, so you can kind of go through and see that. But under participation requirements, 3 eligible employees, 6 application minimum. So I know that we gave a lot of information today. You can always go to this product guide to get more of those details, to get some of the PDFs, underwriting
And
questions, et cetera, is
won't
all located here.
won't Product Buddy also reflect that, Mark?
Somewhat, yeah. So if you do
Okay,
Product Buddy, it does have segments, but it's not going to be
right.
exact breakpoints because it applies to all the carriers. So we kind of made it more generic. You want the exact ones, you'll want to go to the specific product here because they'll be listed here.
Cool.
Thank you for that. Also, our great team, Rosanna is our Buddy IS account executive. Feel free to reach out to any of our carrier contacts on here if you need help. You're always welcome to work directly with the carrier. They'll help direct you to the right person if they're not the right person for you in your territory or with your BGA. But that's also a great resource in this product section is the contact information for the carrier and all of their sample applications and proposals and underwriting. You can get all those PDFs, one-stop shop. Just go to this section under products and you'll be able to find that. All right, with that, I'm going to stop sharing my screen.
Uh, I, I do have something that I wanted to bring up, if that's okay.
Yeah, perfect.
Uh, uh, Chris, who I think is on this call still. Yeah, there you are, Chris. Um, for those of you joining us Tuesday, Chris is going to join us for a discussion about marketing, and I would love for all of you to be there. We will touch on group too, but we would love for it to be a chat about best practices, and we'd love to hear from everybody about what they're doing to encourage the conversation with clients. So you all are definitely invited to attend. So thank you, Chris, for uh, volunteering to do that for us. I think it'll be a great session. There he is.
Yep.
Hi, Chris.
um, yeah, and just for next week, we have Transamerica on next Thursday's study group, and they're actually going to be focused on their newer gap medical insurance plan. So we're going to do a session outside of long-term care. We don't do those as often, but we're starting to see opportunities where if you offer their long-term care product, you also have access to other group products. Buddy can help you enroll any of those products because we have a platform that is designed to accommodate the whole group product suite. So definitely encourage you to attend that. We're inviting those carriers where we think there's a real good tie into long-term care and where we see a value proposition, a product that's rapidly growing in the marketplace that you should be aware of. We also will have the standard on, like I mentioned, to talk about the long-term disability product and some of their other voluntary benefits in a couple of weeks. So expect to see more guest speakers. Obviously we'll still be there speaking, Jason and myself, but we want to get you exposed to more folks, even within the community like Chris, but also our carrier partners. So that's our plan for the next sessions coming up here on the worksite study group. Anything else, Gretchen, before we
Nope, I
sign off?
think no other questions in the chat. I think we're good.
All right.
Everybody knows everything that you just presented.
Okay, that's good because there's a test. I don't know if I
Yes.
told you about that. All right. Well, appreciate you all. Thanks so much for attending today, and we'll talk to you soon.
Thanks, everyone. Bye.
Bye for now.